Sorry, just now I have unmuted the mic. Okay, after 5 or 10 minutes it will have the sound. Okay, sorry, so sorry. Is that now what happens? You will have the step 1. You have to identify the contract. If the contract is executed, then only it has to be legally. There should be some agreement, and there should be some initiation. Okay, that the first step. For every step we will do one question. Okay, for every step there will be one concept of understanding. Is that identify the separate performance obligations? Is that how there is performance at the different stages? Is that determine what we are doing? What is the transaction price? At the third stage, we will say what is the price of the transaction. Allocate the transaction price in the performance. Performance is nothing but what? Performance is nothing but the completion factor. Is that you can take it as a completion factor or package it as a completion element as such. Is that recognize revenue as and when performance obligation is satisfied. Means at the time, is that once it is 100% executed. Is it right? 100% executed. What will happen when you are talking about 100% executed? Definitely the ownership. Okay, the ownership will be transferred. Once the ownership is transferred, then only what will happen? Definitely you will not, one person is entitled to claim it as an asset, and another person is entitled, if there is a concept, then one person will entitled to be a ownership, and for another person it is going to be sales. Is that there are two things? Is that one is then only one will become owner, and for another it will be treated as a sales as such. Okay, this is the simplest way of doing the thing. Again, I will just make it. You just keep it in mind whenever you are executing the contract. It will happen in different phases. First you will have negotiations, agreement. Is that down payment? Then you will have, based on the completion, you will pay at the end of the contract. When we say it is completed, then the ownership will be transferred. One will become, for one it will be an asset, and for the another it will be a revenue. Is it? This much we will cover. Is it? Now what it says on the 5 steps. Is it right? The 5 steps. Now for each step they gave you very clearly. On December 1st 2001, Wade receives an order from the customer for a computer as well as a technical support. Is it? They are talking in terms of a product, and they are talking in terms of a service. Is it? Now if you take into consideration, this is any product. Is it right? Any product you are going to buy it, property, plant and equipments, anything, they will give the product and they will give the service. Okay, we are buying a smartphone also. What we'll do, we'll think about the warranty. In some cases we'll think about the extended warranty. Is it right? We think about the extended, the same thing. Is it? Wade receives an order from a customer for a computer for a 12 months technical. Wade delivers the computer and transfers. This is more than its legal title to the customer on the same day. Is that when we are talking about the customers on the same day, which type of things is there? It is a specific transaction. Is that? It is very specific. There is no time frame. Okay, it is a specific transaction. The customer paid 410 on 1st of December. Same day they have paid. The computer normally sells for 300 and the technical support is 120. This is what is important. This is where we are talking in terms of how we have to distribute. They have paid how much? They have paid 420. Is it right? For the product they paid 300. For the service they paid how much? 120. Is it? For the product they have paid 300. Now what are the steps? What we have to do? first identify that there is an agreement, is it, that between the vendor and the customer for the provision of goods and service, is it? It has been, once you have paid, once you have committed, is it right? Then only the things will come into picture. Otherwise, if there is only an oral communication, if it is a non-verbal verbal communication, it will not be treated as a contract. Is that? It is not treated. This is the one of the precondition. Is that? This is one of the precondition. What is the step 2 they are saying? Is it? Step 2 say identify separate performance. Is it? When you are talking about the separate performance, is that what are there are two performances. Is it? One is related to what? One is related to the computer. One is related to the support. Is that? One is related to the computer. One is related to the technical support. Means you are not going to say that yes. What is the obligation? What is the obligation mean? Obligation is not only to deliver the computer, but also you have to deliver. We are generating a compound amount of 420. 420 has the bifurcation. Okay, 420 has the bifurcation. 300 plus 120. These things are going to be carefully, meticulously planned whenever you are doing this. Now, what is that? What is the step 3? What is the transaction price? We say that transaction price is going to how much? 420. Is that? The 420 allocate the transaction price on the performance obligation. We are allocating 300 for the part of the computer, and we are allocating 120 for the part of the service. Is that? Now, recognize revenue when the obligation is satisfied. Is that? Control over the computer has been passed to the customer. Is it? That then only we will say that yes, the purchaser have the ownership, title has to be transferred. Is it right? The most important, what they say, the control is nothing but the title. Is it? Now, the technical support over, so the revenue for this should be recognized over a period of time. In the year ended 2001, how much you have to identify? We are talking in terms of what? We are taking in terms of what? See, for the computer, is it right? For the computer, it is a one-time delivery. But the issue is with respect to service. Is that? See, when the issue with respect to service, we have done something called as accrual concept. As it has been accrued, we have to take it as a income. We should not treat the income at once. Is it right? What you are having, they are getting an revenue of how much? 120. Is it right? This is for how many months? This is for 12 months. Is it? For each month. Is it right? For each month, the revenue component will be how much? The revenue component will be 120 into 1 by 12. Is it? Sorry. Is it 120 into 1 by 12? It comes to how much? 10. Is it clear? Now you have the this is where the things are going to be understood. This is where means the most important thing is we should know the way the accrual. Nowhere they have mentioned that this is the accrual concept, and they will not do the things as such. Is right? As the accrual concept, as you are working out, we have to know. Another concept which what we are doing, we are also taking into consideration what? We are taking into consideration the matching concept. Matching the service element with the revenue element. Is it? If you are giving the service element for 12 months, match for each month, you have to allocate. So that what will happen if you are doing the things, we are proportionately pro rata basis. Is that? We are proportionately distributing the revenue element among the different periods of time. Now, what is the identify the account? On January 2006, Mono company signed a contract. Is it right? They have signed with a customer to supply the assets in return of payment of 360 on September 2. Control of the asset, is it right? Control of the asset passed to the customer is how much? 31st March, is it right? For the year ended, is it right? For the year, what is the year ended? 31st March 2006. They have signed on 1/1/2006, is it right? And they are saying that signed a contract on and to supply with an asset of 31st March to the, and the payment is how much? They are more talking about the pay. See, this is the point where they have signed. This is the point where they have been made the to supply, is it right? This is the point they have to supply, and this is the point they are going to make the payment. When they are making payment, 39/2006. Now, is it? They have made the payment here, is it right? The rule says that when the payment is made, is it right? You have supplied it, fine. Is it right? You have supplied it. See, very simple. Where cash is like this, is it right? Cash is what we are talking about. Money recognition, is it right? We are talking about what? Which concept is there? Money recognition, is it right? Money measurement concept, business entity concept, accrual concept, is it? Recognition concept, is it right? Something is there, is it right? It is there, I will tell you. It's not something, I will tell you specifically. Unless the money is there in your hands, you should not assume there is a money. Is it? Prudence. Is it? Yeah, prudence. What the prudence say? Prudence say that we have to be very conservative. Till this is, sorry, yeah, I got it. It is a realization concept. Is it? Realization concept. What the realization concept says? Realization concept says that unless until you don't have money in your hand, don't treat money, don't show that in the books as such. Is it right? We have receiving the amount as on 39. Is it right? Till that we don't know. We have supplied it. Is it right? Some people will become bankrupt where they are giving the checks. Checks will not be honored. Okay, they will say that we are not satisfied. Terms and we don't know terms and conditions. Is it right? The rule says that if the amount is not accounted, is it right? If the amount is not accounted, is it? Revenue should not be recognized. Simple one, is it right? If the amount is recognized, amount is going to be recognized on 30th September, unless it is transferred, unless it is handed over to you personal, it is there physically, then only you treat it as a revenue. Realization concept. Realization concept means how much you are realizing. That then only it will be reflected as a revenue. Otherwise, it will be not reflected as a revenue. Fine. Make it a point. Keep it in. This is if you what we have done. We have done two things. Is right. We are talking in terms of prudence. We are talking in terms of realization concept, and somewhere in the top we are talking in terms of accrual concept. See, the concepts are very, very specific how it is reflected on the on the recognition of the revenue as such. Fine. This is the simplest way. If you have the clarity on that, things will be easy. Now, is it? Now, what is the identify the separate performance obligation? What it says, they say that is that Hardy and Company revenue includes 45,000. Fine, they includes 45,000 for the goods sold to the agent. It earned a commission of 10% on these sales and remitted the difference. Fine. When you are doing the things, what happens? There is two different components. Is it right? 40,500. 40,500 is cost of sales. Is it right? And 4,500 is the commission. Is it? This is the cost of sales. Is it? Now, Hardian revenue includes 45,000 for goods it's sold to agent of offer. They earn 10% of these sales, 10% on these sales, and remitted the difference 40,500. How should the agency sale be treated in Hardian's profit and loss account? What happens when see what now you see the things. If we are talking about the things again, we are talking in terms of what? We are talking in terms of general entry. Unless and until they remitted the difference of 40 including to of is it? They have remitted the difference. Is it right? Is it? They have remitted the difference. Yeah, fine. Okay. It is like this. Fine. This is related to offer. Is it right? This is related to offer and this is related to Hardian. Hardian is an agent. Okay. Revenue for goods sold, acting as an agent. Is it? Acting as an agent. Is it? Acting as an agent. Then this is related to the offer. Is it right? Now what they are saying, they are asking us, see that they are asking us how it should be reflected in the Hardian's agency sale. Is it right? How it has been treated is at the Hardian's. It means we have to write the journal entry here. Is it? We have to write the journal entry here. Is it right? When the sales has been happened, got my point? When the sales has been happened, just imagine. Is it right? I'm just writing for our own understanding. Is it right? When the sales has been happened, it will be what? It will be bank to sales. Is it right? Bank to sales. How much? 45,000. Is it right? Now go into further details. Is it right? Go into further details. Is what will happen? You will have 40,500. You have 4,500. Is it right? You have 4,500 and you have the 45,000. This is the sales. Is it right? This is the commission. Is it right? This is the commission and this is what we are talking in terms of bank. Is it right? Now, when the sales has been happened, they have done like this. Is it right? They have to do like this. But how much is the Hardian's money? Hardian's money is only 4,500. Is that Hardian's revenue is how much? Hardian's revenue is, this is the revenue of Hardian's. Is that revenue of Hardian's agent is how much? Revenue of agent is how much? Only 4,500. Is it what they say? They are saying that, see the thing, Hardian's company revenue includes 45,000 for goods it has been sold as an agent. His revenue is including how much? His revenue is including how much? 45,000. But what is his actual revenue? The actual revenue is only 4,500. Is it right? Actual revenue is how much? Only 4,500. But he has put the revenue as how much? He put the revenue as 45,000. Is it right? This has been 1 minute. This has been entered like this. Enter how much they have revenue entered? 45,000 in the books of Hardian. Now we are working in the books of Hardian. Now what happens? We have to reverse the entry. Is it right? We have to reverse the general entry in the books of, is it right? In the books of Hardian to the amount of difference. How much to the amount of difference? 45,000 minus 4,500. It comes to 40,500. We are doing the reversal. Is it right? We are doing the reversal. Is it? Keep it in mind. When you are doing the reversal, because we should not take, is that he is acting as an agent. Is it right? He is acting as an agent. Now, if you want to do the reversal, what we have done in the stages, we have done here debit and we have done here credit. Is it right? Now, in order to do the reversal, what we'll do? We'll do debit. What we are doing debit? We do the debit with respect to what? With respect to revenue. Is that how much we are taking the revenue? Means cancelling it. Again, I will put like this. I will put like this. That makes very clear for us. Is it right? Revenue account, debit and credit. How much they have taken? 45,000. Is it right? How much actually it belongs to them? It belongs to them 40,500. Is it right? 45,000. Unless until you will not put like this, the clarity will not be there. Okay. Now you have to divide 4,500. Automatically we will take that, and 40,500. What we are doing? We are making a debit. Is it right? We are making a debit. So that this is which account? This is the account of Hardians. Is it in the books of Hardians? Is it right? In the books of Hardians, revenue will be how much? Revenue will be 40,500. Is it? Revenue will be 40,500. Fine. And see the thing. What happens? See the It is nothing but the amount of the products, is it right? It is nothing but the cost of sales, is it right? What we are doing, we are going to make the things with respect to what? It talks about cost of sales. How much? 40,500. What we are doing in this process? We are reducing by the difference of how much? We are reducing by 5,500. Is that we are reducing by 4,500. Revenue will, if you take cost of sales, is it right? You take cost of sales also. Is it? Cost of sales. What is the cost of sales? Cost of sales is debit. Is it right? Cost of sales will be how much? 40,500. Is it right? Debit all expenses and losses. Is it right? Debit all expenses and 40,000. 40,500 is not going to have any impact. Is it right? 40,500 is the right amount. Only the thing where we are making the changes is we are making the changes to the extent of how much? We are making the changes only to the extent of 4,500. We are reducing it from where? We are reducing the 4,500 from the 45,000, and we are reversing the entry of how much? We are reversing the entry of 40,500. Is it? This is where we are talking in terms of, this is what we have debit. In the books of hard deal, we are not doing anything in the books of offer as such. The more, is it? Just imagine in the books. I know little bit in beginning, just two, three problems. We work it out. Inshallah, we will have. Still, I can understand. Very simple. I'm not saying you, but I can understand how you are. We are doing in the books of Hardian. When you are doing in the books of Hardian, it is only a component of 4,500. See, I am an agent. Is it right? I am an agent. I have to take commission of 4,500. I should not treat 45,000 as a revenue for me. Is it right? 45,000 revenue is not for me. In the 45,000, a component of 10% is the commission. The balance 90% is related to the other entity as such. Now, what it says, determine the transaction price. How you are going to determine the transaction price? Is that for every step you will have one supporting question, example as such. Is that enter the Kima company enters into a contract with a customer to supply furniture 2003. Control of the furniture transfers on that date. The price stated in the contract is 70 and 50,000. Is it? It is due from where? September 2005. They have entered the contract on 30th September 2003. Control of the furniture has been transferred immediately. Is it right? But what happens? The payment. Is it? What happens? The payment. Payment is when it is on 30th of September 2005. Is it? How much is the amount? Contract amount is $750,000. Is it? The contract amount is how much? $750,000 as such. Is it? Now, what happens? They are paying 7% rate of interest. Is it right? They are paying how much? 7% at the rate of how much? 7% rate of interest. Now, required. How the transactions should be accounted in the financial statements for the year ended 31st December 2003 and 30th September 2004. They are saving 7%. Is it right? They are talking about how much? They are taking into consideration 7%. Is it right? Now, how much? 1 minute. 750,000 divided by 1.07 divided by 1.07. Is it? Now. See, now you see the thing. They are coming to a contract on 30th September, but the payment they are going to be received, how much? They will receive the payment on 30th of 9. Now they say market rate 7%, means we have to, they are telling us that you should calculate interest also on that. Okay, we have to calculate interest component on that also. Fine. Indirectly they are saying, is that, and not only indirectly they are saying that what is the present values. Is it right? What is the present values? What is the present value of 750,000? What is the formula for present value? I will write this here. Is that I told you previously also, but I will also write present value is nothing but cash flow divided by cash flow divided by 1 plus r to the power of n. Okay, this is for how many years? This is for 2004 and this is 2005. How many years are they? It is for 2 years. N is how many years? N is 2 years. Is it right? How much is the present value if you take into consideration 750,000? Why we are doing this? We want to know what is the value we are getting. The value of money will decrease over a period of time. Is it right? 750,000 divided by 1.07 to the power of 2. How much will get? $655. How much? Yes, where is my phone? 655,079. This is the value. This is the value as on. Is it right? This is the value as on 30th September 2003. Is it? This is the value as on 31st September 2003. Is it? This is the value as on 31st September 2003. How much is there? 655,079. Second one. Okay. Value, what they are saying, what is how much you have to account it. Value as on 30th September 2004. Is it? The value as on 31st September 2004. When you are saying that, we have to take that. Is that value as on 30th September 2003 is how much? 650,079. Is it right? $655,079. Is it right? Now, what they are saying? Add. Is it right? Add rate of interest. Is it right? Add rate. 1 year we have to pay rate of interest. Is it right? Add rate of interest for the year. For the year, how much? For the year ending. Is it right? For the year ending 30th/9/2004. Is it right? For the year ending, how much? 655,079 times 0.07. One minute. 655,079. It comes to how much? It comes to how much? 855. Okay. Plus 655,079. It comes to how much? 700,934. This is value as on 30th now September 2004. Is it right? First, this is the step 1. Is it right? The first you have to calculate the present value. Is it right? First you have to calculate the present value. Then you have to calculate the, this is step 2 and this is step 3. Is it clear? Is it clear?
Yes, it's clear.
Yeah, I'm waiting your response. Allocate the transaction price. Okay, allocate the transaction price to the performance obligation to the how what is the performance and how you have to allocate the price. Is it right? Shinji company sells a machine for a 1 year free technical support. For how much? They are selling a machine for a technical support is how much? Is it? They are selling it for how much? The machine is how much? It is. They are selling it for 50,000. Okay, they are selling it for 50,000. Now, it usually sells the machine for 60,000. The value is how much? We can say that the book value. Is it right? The book value is how much? 60,000. But what is the sale value? The sale value is 50,000. But does not sell technical support on this machine as it is a standalone product. Other support services ordered by Shinji contract a markup of how much? A markup of how much? 50%. It is expected that the technical support will cost how much? If you are taking the technical support, is it right? Technical support, it cost how much? It cost 10,000. How should the transaction should be allocated? Price should be allocated between the machine and the technical support. They are saying that it is a 50%. Is it right? They are saying that it is going to be a 50%. Now, what we have to do? What is the book value? Book value is 60,000. Is it right? Book value is 60,000, and they are estimating that they will have a book value is 60,000. They are selling the value at how much? 50,000. Is it? But does not sell the technical support of the machine as a standalone sub project. Other support services will be how much? Will be 50 markup of how much? 50%. What is the technical support? The technical support is how much? The technical support is it right? The technical support is how much? The price plus markup. Okay, that's what it says. Is that what they are saying? It is expected that other support services will have 50%, and support services is how much? Support services will be 10,000. Is it? Support services will be 10,000. Now we have to know what is the selling price. Is it right? Selling price of support services. Is that selling price of support services is nothing but the cost. Is it right? The cost plus markup. Is that the cost plus markup? The cost is how much? The cost is 10,000. The cost is how much? The cost is 10,000. The cost is 10,000. Is it? The cost is 10,000 plus 10,000 into 50 by 100. It comes to how much? 10,000 plus 5,000. It comes to 15,000. Is it? Now, what is the okay? Clear? This is, make it a point. This is step 1. Okay, this is step 1. What is step 2? Is it? This is step 2. Okay, what it says in the step 2, we want to know what is the total price. Is it right? Sells a machine and 1 year free service. Is it right? 1 year free service for how much? 1 year free service for 50,000. Is right? Now if you take into consideration the selling price of the support service, is that you take into consideration what is the total price of the product, is the total selling price of the product. Is that we want to know how much is they have paid only how much? They have paid only 50,000. Is it right? But what is the actual price and what is the price they have paid? Is it right? What is the actual price and what is the price they have paid? First we should know what is the actual price and what is the price they have paid, and then in these 50,000, got my point? In these 50,000 we have to segregate. Is it? We have to segregate what is the price of the machine. Is it right? What is the cost of the machine and what is the cost of the support services. Is it what? See, that is very important. What is the cost of the machine and what is the cost of the support services? Got my point? We have to divide. Now, if you take into point the total gross value of machine. Is it a total gross value of machine including services? Is it right? How much is the thing? What is usually sells a normal selling price? Is it right? Normal selling price is how much? Normal selling price is 60,000. Fine. Normal selling price is 60,000 plus. Is that what is the selling price? Support services selling price of support services. Is it right? Selling price of support services is how much? 15,000. Is that selling price of support services? This is the normal price they usually. This is the normal price they will usually have for the product. Is it at how much? 75,000. But how much they are going to get? They are getting the product at what rate? They are getting the product at 50,000. Is it right? They are getting the product at 50,000. Now, is that 60,000 and 15,000? Is that this is the machine value? Is it right? This is the machine value and this is the support value. Now, what it says, they are saying that is that I will write here. Okay, I will write here step 3. Okay, step 3. Fine. Now, what the rule says IFRS that you have to divide it. Is it right? You have to divide it. The consider whatever the discount is whatever IFRS 15. Is it right? IFRS 15 says that you have to account the amount. Is it right? With discount. Is it right? With discount. Now we should know how much we got. 50,000. What is the amount we have paid for machine and we have paid for the support services. Fine. Now when we do the things, how much is how much they got discount in order to see how we'll say 1 minute 25,000 divided by 75,000. 25,000 divided by 75,000. See, fine. Is it right? For is it 1 minute? 25. Just I want to write it, okay? I just want to write it on paper. For 75,000 discount is 20. For 100 discount is how much? 100 divided by 75 into 25. Here 100 divided by 75 into 25. Yes. Yes, for 75,000, is it right? The offer price is the discount is how much? The discount is 25,000. Is it right? How you got 25,000? You got 25,000 is nothing but 75,000 minus 50,000. Is it? For 100% discount is question mark. 100 divided by 75,000 into 25,000, it comes to how much? 33%. Is it right? It comes to how much? 33%. Little bit careful on here. Little bit careful. 33%. Now it's simple. It's done. We got the things very clearly. Is it right? Now this is where the input discount is how much? This is the amount of discount we have received. Is it right? This is the amount of discount we have received. Now step 4. Is it right? Step 4. What is the machine value? Machine value is 60,000. Fine. Services is how much? Services is 15,000. Is it right? Services. Now you are taking less discount. Is it right? Less discount. How much? 33%. Is it right? Less discount. How much? 33%. How much you will get? 60,000. 60,000 into 33%. It comes to how much? 60,000 into 33 minus 33%. Is it right? 40,000. Here with discount is how much? Discount is 33%. How much you will get? Here you will get 10,000. Total amount is how much? 50,000.
Can you repeat again step 4?
Step 4?
Yes.
Yeah. How much you got discount? Discount 33%. Step 3 is clear for you?
Yes, it's clear. Step
Now 33%. 33% is the discount. 33% discount should be for machine and 33% discount will be for the services. Okay, equal discount. We are not going to have anything. Now when you do the things, what will happen? Listen carefully. 60,000, is it right? How much you are getting discount? 60,000 into 0.33. How much discount you are getting? 20,000. Is that how much discount you are getting? 20,000. 60 minus 20, how much you will get? 40. Here how much is the services? 15,000. How much discount you are getting? 33%. Is that how much discount you are getting? 5,000. Total amount is how much? Total amount is 25,000. If you take the price, is it right? If you take the price, we have calculated in the beginning. How much is the price? See here we have calculated. How much you have calculated? The total price is how much? The total price is 75,000. The total price is 75,000. They bought it for 50,000. In 50,000, they got the machine and 1 year free technical support. Is it 1 year free technical support? Now, definitely you cannot say that, see, when you are giving the discount, it has to be, discount should be apportioned to the services also. Is it right? We cannot say that we are paying full for service and full for no for product. Is it right? So when we say, first I'll just go by step. Is it right? What we did in the step 1, we have calculated what is the markup for the services. They mention very clearly that there is a 50% markup adding the profit to the service. They have said service was 10,000 plus 50%, 10 plus 5, 15,000. Fine. They gave you the normal cost of the machine also. They gave the normal cost of the machine 60,000. The value of the services will be 15,000. If we take normally, the value of the product will be how much? 75,000. Okay. Now, how much you got it? You got that machine for how much? You got machine for 50,000. Fine. 50,000 includes the machine as well as 1 year services. Got my way? 50,000 includes machine as well as 1 year services. Now, if you take the, what is the value of the machine? The value of the machine is 60,000. Is it right? Without discount. Value of the services without discount is how much? 15,000. Now, how much you got the discount? You got the discount of how much? You got the discount of 33%. When we got the discount of 33%, proportionately reduce the discount equally at the rate of 33% from the machine as well as from the service. Is it? That's why we got how much? We took 60,000 into 33% discount. 20,000 will come. The value is 40,000. 15,000 into 33%. The value will come 10. Now you can make it very clearly. Is it right? If you add this 50,000 plus 25,000, the total price is how much? 75,000. Is it clear?
Yes, it's clear.
Okay. That is the reason we have made, first you have to calculate the how much you got the discount. That's the reason I have made, I have written this one. Is it right? This is very, very specific. This is the lead. How much we got the discount as such. Recognition of the revenue when or as performance obligation is satisfied. The following are the indicators. Is that these are the indicators? These are the reasons. Is all the time we are following which standard? IFRS 15. The following are the indicators of the transfer of control. When the transfer will take place. Is it right? When that, see what happens usually in the businesses, you are buying a machinery, is it right? They will come, they will install, they will give service, is it right? You are satisfied. When you are satisfied, then at the end, sometimes they will give service for 6 months, is it right? After 6 months, the ownership will be transferred, are subject to terms and conditions of the satisfaction. As per IFRS 15 of revenue reporting standard, the entity has the present right to payment for the asset. Means it is purchased, is it right? If it has been purchased, then only I will be in a position to pay. Then only the revenue will be recognized. Maybe initially 10%, 20%, 30%, whatever. But you should pay. That's the most important thing. Is it right? The customer has a legal title of the asset. Definitely it is going to be transferred. The entity has transferred physical possession of the asset. Is that you are transferring the asset from one to A to B. Okay. The customer has a significant risk. The risk will not be with the seller. The risk is with whom? The risk is with respect to whom? The buyer. Then only we are going to say that it is the revenue. The customer has accepted that asset, then only we say that the performance obligation has been satisfied. Again, this will be there in MCQ section A. Is that? This will be there in the MCQ section A as such. Okay? Subject to that. Means, see, in simple words, the value of the asset is the asset has been transferred, or I have paid a part payment of the asset, then only I agreed to pay the remaining amount, isn't it? And I'm having the physical possession of the asset, and more importantly, the risk will not be for the seller, the risk is going to be for the buyer. That's very. The moment you say this, the entire summary of this concept will be clear. The moment you are transferring the risk, definitely what will happen? You are transferring the ownership also. Fine? Now, is it clear? Can I start now?
Yes.
Yeah, I know you need break. That is the reason I am just giving some time in between, okay? 1 or 2 minutes. Johan entered into following sale transaction. There are 2 points are there, okay? A and B. Separately we will do, okay? Now, Johan sold on 1st, is it right? On 1st of April 2006, they have sold its factory to KF, a finance company, for how much? 800,000. Is it right? Johan continued to use the factory, means we have sold it, but risk is not transferred. Understand my point? Risk is not transferred. If you are using the factory, is it right? Johan has continued to use the factory and was responsible for insurance and maintenance of the building. And see the things. And Johan has the right to repurchase the factory. He has the right to repurchase the factory at 980. Is it right? He has sold it for how much? He sold it for thing, and he has to have the right to repurchase. Means there is a condition attached to the transaction. Is it? Condition is attached to the transaction. He is using the factory, and he has the right to purchase, representing a 7% growth in each year. On April 1st, 2006, is it right? At April 1st, 2003, the fair value is how much? First, the fair value is how much? 1.5 million. Okay, the fair value is how much? 1.5 million. With the carrying amount is how much? Carrying amount is 600,000. The fair value is expected to increase. The fair value is expected to increase by 2009. Is it right? Explain the financial treatments. Is it right? Both are different. Explain the financial report and treatment for the issues for the year ended 2007. Is it? Is it? Now, first one, second one, third one. What it says, see the things. See simply what they have said. They continue to use the factory and were responsible for insurance and risk. Is it right? They have insurance and risk. Means what happens? The risk is not transferred. Is it right? The risk is not transferred means what happens? The control, is it right? Control is with Johan only. Is it right? Next, Johan has the right to repurchase. Means again, this is not a sale, is it right? They have right to repurchase. Means if he wants to, as per the terms and conditions, he has first say, is it right? He has the first, unless until within that time period he is not willing to sell it, that's a different case, is it right? But unless until he don't say no, it cannot be initiated, is it right to repurchase. Now when you are saying right to repurchase, what is the purchase price? Right to repurchase is that purchase price, is it right? Go sentence by sentence, okay? Go sentence by sentence. What is the purchase price? Repurchase price. Repurchase price is how much? Repurchase price is 980,000. Repurchase price is 980,000. Is it right? On April 4, 2009. Slowly and steadily. All the conditions, whatever we have done, those conditions has to be satisfied. Is it right? Repurchase price is how much? 980,000. Still, they are holding it, and repurchase price is more than the book value. Is it right? More than the 800,000. Is it right? Sold value. Fine. Now, the carrying amount is how much? 600,000. The fair value is expected to increase. Fine. Now, it's not a sale agreement. It is right. It is not a sale agreement. Fine. It is not a sale agreement. I am writing. See. It is not a sale agreement. but it is a financial agreement or arrangement. Understand, but it is not a sale agreement. Is it? You have, see, you are putting so many things. You are taking the risk. You have the right to repurchase. Is that you? If the purchase price is going to be more than the repurchase price is more than the sale value, is it right? If that is the case, it is not. It is not a sale agreement. It is not going to be treated as a revenue. Is it right? Now, what they say, there is a 7% growth in value. Is it right? There is a 7%. That much we have done. At 1st April 2006, the factory has a fair value of 1.5. Carrying amount is there. The fair value is expected to increase by 2009. We are not talking about 2009. We are concerned about what? We are concerned about both the transactions. We are concerned about 31st March 2007. Is it right? 31st March 2007. If there is a 31st March 2007, they say that there will be a 7% in the growth of the asset. Is it right? Means nothing but, see, if it is a financial agreement also, it is nothing but the finance cost. Is it right? It is nothing but the finance cost. What is the cost? What is the cost as on 1/4/2006? As on 1/4/2006, the cost sale value is how much? I will put not this one. I will say I will put it as a fine. Well, fine. It is. We have to read as that. Is that how much is there? The value as on 2006 is this much. Is it right? Add. Is it right? It is a finance arrangement. If it is finance arrangement, it means you have to add 7% finance cost. Is it right? 7% finance cost. How much is there? 800,000 into 7 by 100. It comes to how much? 8 7s are 56. Is it right? 8 7s are 56. How you have to report? You is it right? 8 7s are 56 assets. 1 minute. Is it? Still, now if you are taking into consideration this one, how much you have to record at the, this is nothing but this is the finance cost. Finance cost as on 31st March 2007. Is that we are not concerned about anything else. We are not concerned about what happens in 2009, what happens in other cases. We are least concerned. Is it right? How the things you have to write like this. Is it right? First, you have to say that risk is not transferred. Still, there is a insurance and maintenance we are paying. He has the right to repurchase, and repurchase price is more than the value of the asset. Definitely it will be a profitable one, and it is not a sale. There is no sale agreement has been done. It has been done, but with subject to conditions. Is it? Sale agreement with subject to conditions are there, and it is, if you take like that, definitely it is a part of the financial arrangement. Now, see, when they say that 7% is increasing every year, definitely you will add 7% value. Is it right? You have to pay. Is it right? When it says a financial arrangement, it means it is a financial cost. Okay. Next. On 31st March, Johan sells an oven. Are you clear about this? One by one. The moment one concept is over, I will ask you. Any doubt is there? Just you let me know. Any value, any calculation you want more specific, just you let me know. Okay? Yes, I'm taking the next one. Okay? On 31st March, Johan sells an oven plus spare parts to Marco. Is it right? How much they have sold it? Is it? They have sold it for how much? They have sold it for the spare parts. Okay, my oven plus spare parts. Is it right? Spare parts. Is it right? How much they have sold it? They have sold it for 220,000. The price has been split. Is it right? The split has been split between oven and spare parts. That's fine. Is it right? That's what we have done. Oven is how much? Oven is 200,000. Is it right? Oven is 200,000 and spare parts are how much? 20,000. Delivered by when? It has been delivered by March 2007. 31st, same thing. But was asked to hold the spare parts by Marco because Marco factory is very close to Johan house. Johan expect to hold the spare parts for how many years? 2 to 4 years. Means they are not using the spare parts for next 2 to 4 years. Is right? The parts were kept separately in the warehouse, cannot be used or sold by Johan, and are ready for immediate delivery or collected at Marco's request. Fine. Means the parts are exclusively kept for him. Is it right? The parts are exclusively kept for him. Anytime nobody can use it, means he has the right. Okay. Johan agreed to the transaction as decided that holding cost will be, means if you are having a storing cost, it is not going to be have any significant effect as such. Is it right? Now what they want to say, they want to make it a point that how much is the revenue and how much is the cost of that. Is it right? See, very simple. Is that if you are talking about this type of transactions, is it right? Johan has, if we are talking about this type of transactions, what we are doing, we are securing the product. Is it right? We are securing the spare parts. Is it? We are securing the even you are not taking the control. Is it right? Even you are not taking the control, you have the right over those things. Is it right? And Johan cannot sell the goods to anyone, and if there is a requirement, they have to release it. Is it right? If there is a requirement, they have to release it. Means you are pay and you are going to pay and you are going to hold it. In technical terms, they use the word bill and hold. Is right? In technical terms, they use the word bill and hold. See the thing, securing the spare parts. Fine. Is it? Marco have the control. Okay. Marco have the control and Johan cannot sell. Yeah? Deliver as request. 3 points we have to mention. Is it right? The first one is they have the control, they cannot sell and deliver on the request. Now, what is important here is whether we have to treat this as a revenue or not. Understand point? That is more important. If these conditions are satisfied, is it right? If these 1 plus 1 plus 1, is it 1 plus 1 plus 1, all are in favor of the Marco, is it right? If 1 plus 1 plus 1 are favor in the Marco, this transaction should be treated as revenue as per IFRS 15. Is it right? This transaction has to be treated as a revenue 100%, because see, you have the control. He cannot sell, he has to deliver on request, and definitely now there is no second option. Is it right? That is the reason if you are taking for a year ended 31st March 2007, 2200 with bifurcation should be treated as revenue. Is it okay? Is it clear? Is it clear?
Yes, it's clear.
I will stop here, okay? Inshallah, tomorrow morning we will continue from here. Inshallah, tomorrow morning we will complete this, okay? We'll complete this, and if you have some time, we can use the my section B. We will do, okay?